Thanks so much for joining us today. It's Friday. Happy Friday to you. I'm Marlon Bowling, your tour guide to the ag commodity trade. We're going to be putting a bow on this trading week here after today's session. We'll see what we accomplished this week. In the meantime, let's review what the markets did overnight on the Globex trade, shall we? We'll go to the corn first. On the corn prices overnight, a little bit weaker. Janet mentioned this a little bit ago. December corn down 2 3/4 this morning. We're at 674 3/4 off our overnight high by about 5.5 cents or so. On the soybean trade this morning, looks like we're going to be lower across the board. November down 6 1/4 this morning at 14.45 1/4. That would be about a dime off of our overnight high there. Checking in on the wheat trade in Chicago, you had December 5.5 lower at 839 1/2. That would be 3 cents from our low this morning and last night, and off of our high last night by roughly about 13 cents. Now let's go to the Kansas City board and see what happened there. We had hard red wheat with December 5 lower at 921 1/4. In the spring wheat market in Minneapolis, December was down 3 cents at 925 3/4. And to wrap up on the cotton here, December was down 377 points at 99.52. Wow. Back under $100. Haven't seen that for a while, or I should say back under $1 a pound. Let's bring in Brian Hoops and discuss what's going on in the overall ag commodity markets here this morning. Brian, thanks for joining us. Happy Friday to you. What's with the grain markets being weak in the knees today?
Yeah, good morning, Marlon. Yeah, we're kind of seeing a little bit of selling across the board in a lot of things. The stock market being down sharply. Crude oil's kind of given up some overnight gains. And we're seeing, I think, a little bit of pre-weekend type hedge pressure against the corn and soybean markets. That's probably going to continue, I think, going into today's close, is just keeping us on the defensive. It looks to be a pretty active harvest weekend, and next week's going to be very active as well. Very hot conditions going to speed the maturity of the crops along. Those hot conditions are in the plains areas, and our forecast is for real hot and dry, which means very little winter wheat seeding will be done next week. A lot of producers I've talked with are going to wait to see better rainfall chances. So, wheat market's pulling back from its highs, but look for that July contract, new crop Kansas City, to find some support. And, fundamentally, it should try and rally, putting a premium into the winter wheat seedings time frame.
Yeah, conditions are difficult out there. From what I understand, a lot of folks are just concerned about even trying to put any seed in the ground. In some cases, I heard that the seed that was planted a year ago has just sprouted in some areas with the rain received a couple of weeks back.
Yeah, it's it's not a good situation if you don't have additional rains. Crop needs to get out of the ground, needs a lot of rainfall and some moisture, cooler temperatures, and exactly what we're not seeing at this time. So, there's still elevated concerns about crops. We're getting into the harvest time frame. We'll find out what our yields are going to be for corn and soybeans. The market's, I think, real disappointed that we haven't had any demand. We've gone an entire week without any private export sale announcements. The export numbers that we saw yesterday showed soybean sales continuing to be pretty decent compared to year ago levels, about 13% higher, but the corn sales starting to really drop off. We're about half of what we were a year ago. China was a real big buyer of corn a year ago, and they've not come into the corn market this year. Now, that may change. There's been some talk about Argentina being extremely dry this year. They're the third largest exporter of corn on the worldwide market. So, that if they plant less corn acres this year because of drought conditions, that may usher some demand back to the U.S., but just so far we've not seen that be the case.
With the local basis so strong and really trying to attract sales of immediate corn and soybean delivery, is this one of those rare years where it may benefit producers to go ahead and reward that basis and let them have some right off the combine this year?
Yeah, I think that's especially true if you don't have any storage of your own. If you're relying upon commercial storage, you were knocking on the door of $7 futures this week, and then whatever your basis is doing, and a lot of places you have a real positive basis as opposed to a negative at this time of year. So it makes a lot of sense financially to let that crop grow. And you had just a second ago on your screen there, lack of carry in the corn market. For example, that D's corn is the same price as July, so there's really no incentive to carry it into the summer. Unless you believe that the market's going to continue to move higher, you're much better off making those sales and then coming back own and re-owning it on paper. So you really look at your basis real tight and reward the market, because it's telling you at this time there's some really good marketing opportunities right here, right now.
Good point. All right, we'll come back and talk a little livestock action here on a Friday with Brian Hoops right after this. All right, we're back talking with Brian Hoops, saying let's talk about livestock here. What happened in the cash market yesterday? On the livestock summary that we have, looks like things maybe finally firmed up a little bit. What was your take?
Yeah, we were expecting a steady to higher week for cash cattle this week, and that's what we received. The Southern Plains trade at 142. That's mostly $1 higher. Some dress trade was at least $1 higher, maybe $2 higher in the north. And we may have some cleanup sales today, but for the most part, cash is wrapped up for the week. We saw futures market react to that positively by seeing some hedge lifting and dollar plus gains in the front month contracts. I don't expect to see that again as the stock market is slipping here this morning. It could weigh on the cattle futures, at least initially on the opening here, I'm afraid. But maybe feeder cattle catch a bid, kind of depending on what the corn market does, which was a little bit softer overnight. But you don't have a real incentive this week this Friday here to push sharply higher once again. But we were happy to see the strength in the cash markets. We'll see what next week's show lists want to bring. But with the heat coming in next week, there may be an impetus to move some of these cattle a little bit sooner early in the week.
Yeah, the Dow down 355 points here this morning. And it could be pretty significant, a lot of recessionary talk. All right, now let's look at the live cattle. How did we finish yesterday? Well, a closer look reveals that we had October still finishing yesterday with a strong gain. It was up $1.27. We closed at 145.62. That was not a bad day. It was led by the nearby contracts. On the feeder cattle market, they had a lower tone heading into the close. October was down $0.50 at 180.92. On the lean hogs, when we headed home yesterday, October was up $1.35, but the biggest gain was in December, and that was up $2.35. It was priced at 87.65. Well, Brian, great information. Thanks for talking with us here this morning. Always a pleasure. You have a good weekend, too. Brian Hoops of Midwest Market Solutions with us. Janet, we're about ready to begin at the bottom of the hour.